It's listening time, and you're listening to the Better Banking Podcast. Today's guest is Alan Pan from the Finance Department of Gain Federal Credit Union, as we ask him what it takes to keep the credit union competitive despite the challenges that the economy and shifting times have thrown our way over the years. And now, your host, Eric Foster.
Hello and welcome to the Better Banking Podcast. I'm your host, Eric Foster, and behind the scenes is Producer Rune. How are things in the control booth today, Producer Rune?
Things are going great. No complaints. We'll come up with the joke at a later date.
That was the funniest bit you've ever done. The Better Banking Podcast is brought to you by Gain Federal Credit Union. That's us. To fulfill our promise to share our financial knowledge for your financial gain. Now, I'm not the expert, but I know the experts, and we bring you the experts. And we have an expert with us today to help you manage your money better with useful information and resources. We'll also share our insights on how credit unions work and how they're different from banks. That's a lot. So let's get started. Our guest today on the podcast is Alan Pan. He's the Accounting Supervisor from the Finance Department here at Gain Federal Credit Union. Welcome to the podcast, Alan.
Hello, everyone.
No, it's just me. No, of course it's everyone. Everyone listening. Hey, Alan, good to have you here. Give us a little background on yourself. When did you start working for Gain, and how long you been in the finance business?
Well, I started at Gain in 2020, but I have been with the banking industry for more than 10 years.
And what did you do before you came to Gain?
I was the controller at a credit union in downtown LA.
What does a controller do? Is that like a video game controller? What is that?
Controller is supervising accounting activities and working on budget, working on ALCO package.
What's an ALCO package?
An ALCO. Do we really want to go into detail on ALCO package? It's basically a very important aspect of managing finance, right? Or cash flow. It entails about managing the assets and liabilities of a credit union, and to make sure that we're monitoring and managing interest rate risk, market risk, credit risk, and liquidity risk for any financial institution, essentially.
So you're keeping an eye on the membership's money that they have on deposit here that we use for investments, whether they're, to make earn interest on items or to purchase equipment, maintain the payroll. You folks keep an eye on that money.
Exactly.
And we're done. So the finance department is made up of how many people here at Gain?
We have 4 people at our department. There is the CFO, there's me, the accounting supervisor, and 2 accountants.
What is everybody's role in the finance department? What does everybody do? That, our listeners may not be familiar with what exactly a finance department is and what work they do. You've given us a bit of a briefing on the overview of it, but individually, what are the responsibilities?
In our case, the finance department needs to monitor our cash positions, right? Making sure that the cash that we receive and the cash that go out from the credit unions are balanced, right? So we're always monitoring our cash positions. And in addition to that, we also calculate interest income for the credit unions. We pay invoices and bills to the vendors. So we recognize the expenses. And we also manage the cash flow, make sure that we have sufficient funds in our institution.
So we are a not-for-profit financial institution, but that doesn't mean we don't earn a profit because, as you just spelled out, there are expenses that we have.
Like any other companies and organization, there's always overhead that we have to recognize. But on top of that, right, we take in members' deposit, and our purpose is trying to make a profit, and so that we can distribute these profit to our members.
And we do that in the form of lower interest rates on loans and higher dividends on their savings accounts.
Yes. And also better service.
You're behind the scenes keeping an eye on our members' money.
That's true.
Oh, that's good. I'll remember that. So money and the economy are always in the news. it's always changing, and none of us have a crystal ball. What are some of the tougher accounting challenges that you've had to face in recent years?
Well, there are two that comes to my mind, right? So the first thing was COVID, right? So during COVID time, right, the economy kind of slowed down, right? The unemployment was really high. So there was a lot of uncertainty in the air that we didn't know what's going to happen. So as a result, for our credit union, we had to calculate a huge loan loss reserves in anticipating that a lot of loans on our books were going to go bad, right?
And that loan loss reserve, that's like a savings account for the credit union?
It's more like what I like to call emergency fund for bad debt, right? Because we had to basically increase our reserves just so that we have enough cushion to offset any losses on the loans.
And so what panned out after COVID? Did we experience those losses? Did we have to use those reserves?
Oh, no. I guess this is kind of like amazing thing that happened, right? So we had this huge slowdown in economy, and then somehow we ended up not needing those reserves at all.
And so what happens to that money that was put there?
When we collect the deposit from the members, right, it usually goes to three places. First, it would be used for funding loans, right? So if our member decide to buy a house and get a mortgage or get a car loans or credit card loans. And the second thing that we use deposit for is we buy investments. We buy security investments. Typically, they're either mortgage-backed securities or agency securities that earn interest for the credit unions. The last thing is we will park those deposits in a cash account at the Federal Reserve Bank, right, to earn interest on those too.
And that keeps our money supply usable where we need it, making money where we need it, being able to lend it out to the members when they need it, and to pay dividends to the members who deposit with us.
Yes, exactly.
What makes a great rewards points program? Is it earning points on every purchase you make? Or is it earning double points on gas and groceries? Is it exchanging your points for merchandise or experiences? Or is it easy online points management and redemption through online banking? The Gain Platinum Rewards MasterCard is the card for people who love points, no matter how you use them. Know more at gainfcu.com/platinum. And remember, it's not what's in your wallet, it's what you take out. Back when you had asked Alan what's the toughest accounting challenge, I think Alan mentioned two examples came to mind, and we heard about COVID, so I wouldn't mind hearing about the other one.
So the second one that we have is the inflation and the rising rates from the Fed, right, or the FOMC.
What does that mean?
Federal Open Market Committee. We have seen the inflation that grew up to 8%, 9%. And for the Fed, one of their main goals was to fight inflation and lower unemployment rate, right? So they had to rapidly increase their Fed fund rates.
What exactly is occurring there?
So when the Fed raised the rate, right, what's going to happen is it's going to drive up the cost of borrowing, which entails credit cards, car loans, mortgages, and HELOCs. So when that happens, the cost for our members or anyone who's want to borrow money is going to go up.
And so what's the effect on the credit union when that happens?
So when the rate goes up, right, profit margin goes up in the credit union because we are able to charge a higher rate while the deposit will also go up, but the deposit rates will not go up as fast as the rate that we charge on loans.
Why is it that we just can't keep our lending rates low for the member? Why do we have to raise them if the Fed raises them?
You got to think about is, when the Fed raised the rate, right? That means that they're setting the floor for the market, right? And so we had to add a margin to the benchmark rate in order for us to be relevant
And to stay in business.
Yeah, that too.
What's something that you think people don't understand that you would like them to have a better understanding about?
They don't have a grasp of their finance, right? And in my job, right, we do budget, we do cash flow, we do analysis of various kind. And I realized that some of these stuff is important to everyone and even to our members. Sometimes when you think about, oh, I have income, I have expenses, so a lot of people think, oh, I need to make more money. But the reality is, it's very difficult for a person to make more money, right? We should be thinking the opposite. How do we cut 10% of our expenses, right? So we can have a better balanced budget. And with that, once you understand your situation in terms of income and expenses, then you can use those opportunities from the cash flow to make investments, such as buying CDs from, that we offer in our credit unions, right?
So, Alan, what is the difference between accounting and finance?
There's a slight difference between accounting and finance, right? When we talk about accounting, it's more for reporting, right? You're reporting what have already transpired. But for finance, it's more tricky, right? Finance is more like you're trying to look into the future. Start talking about the economy, right? The Fed and the deposit rate, right? The loan rates and all that stuff. That's finance, right?
And you can say that. That's fine. You can say, "Hey, Eric, you dummy. That's fine. That's not what we're talking about here. That's not what I do. I do the tough work."
Yeah, balancing checkbooks. Yes, that's exactly what we do here.
How many checkbooks are there?
On a day-to-day basis, there are two accounts that we balance daily.
And what are they?
The first one is the Federal Reserve Bank, right? That's where we park our cash. And the other one is our Catalyst Corporate Credit Union. That's where we process our checks, our ACH, and our wires.
And what is ACH?
Automated clearinghouse. That Jeroen, you have to help me here. I don't know what it is. I don't remember.
Nope. You're on your own.
Is that the place where you enter to win money and the guy shows up at your doorstep with the big check?
Basically, ACH is electronic payment, right?
Yeah, like your Social Security deposit, your payroll deposit, your various other deposits.
Yep.
Not the birthday check from grandma.
No.
So you mentioned Catalyst Corporate Credit Union. What is that?
It's a credit union for the credit unions.
So that's Gain Federal Credit Union's credit union to do business.
That's correct.
Alan, thank you so much for joining us today.
Thank you very much. Glad to be here.
Thanks. That's all for this episode. Please send your comments and questions to podcast@gainfcu.com and be sure to subscribe and leave a 5-star review on Apple Podcasts. Once again, thank you to Alan Pan. He's from the finance team here at Gain Federal Credit Union, and to producer Ruin, who's in the control booth. How are things in there today?
What makes a great podcast producer? Is it a robust and booming voice resulting from multi-layered compression filters? Or is it editing out all the boring stuff that happens between the good stuff? Is it access to a vast library of stock music and sound effects? Or is it as simple as remembering to hit the record button at the beginning and end of every session?
It's worse than I thought, folks. Join us next time because, as you know, I'll be the producer and the host.
The views and opinions expressed by hosts and guests of the Better Banking Podcast are not those of Gain Federal Credit Union. Gain Federal Credit Union is insured by the NCUA and an equal housing lender. NMLS number 407810.
Gain Better Banking.